It's been a fun week. Let's get into the details. So let's start with mortgage rates, and they were steady this week, but I was so hoping for more. The PCE inflation report came out on Friday, and while it did show inflation was decreasing, it just didn't beat market expectations, so everything was kind of steady. I do think we could see some improvements going into next week as the market digests some of that data along with some other economic reports. So we could see potential in next week, but right now we're steady. So what's hot this week? Well, it's pending home sales, and that's the measurement of signed contracts on existing homes. Now, it was up a surprising 2.5% in the month of December, and when you combine that with the revised numbers that they released for November, it's actually up about 4% for the last 2 months. Now, that's significant when you consider the fact that pending home sales had been decreasing fairly steadily for the last half of 2022. So when you hear people talk in the news or just the noise out there about a housing crash and a market crash, well, it's harder and harder to make that case when pending home sales are actually on the rise. So what's not this week? Well, while I could talk about the Dallas Cowboys or even the winter weather wreaking havoc across the nation, I'll just stick with financial matters. And the Fed is meeting next week to increase the federal funds rate yet again, likely another 25 basis points. And I'm already hearing stories in the news about how it's going to impact rates across the board from credit cards to mortgage rates. And the part about mortgage rates is just absolute noise. In fact, if we look at the last two meetings where the Fed met to increase rates, mortgage rates actually decreased afterward. What is a real potential issue is the impact to credit cards. And a report that came out on Friday showed that consumer spending is actually down 0.2%, and that's multiple months in a row of consumer spending decreasing. So if the Fed continues on this trajectory, they could actually impact the economy negatively if consumer spending decreases too much. So I think they need to take a cue from the Bank of Canada that said they're going to hold off on further increases to see how all of this impacts the economy and consumers. So until the Fed changes their stance, they are staying on my what's not list. So what's next? Well, it's opportunity, but opportunity that could be dwindling because those pending home sales numbers are starting to increase a little bit. And as those continue to increase, you'll see the ability to negotiate on price and closing costs or seller contributions start to dwindle. So if you are serious about buying a home, especially if you're a first-time home buyer or again, looking for the ability to negotiate, now is your time. Don't let that opportunity slip away. And lastly, guys, I would love to hear from you. If there's a topic you would like me to talk about or something that you're interested in that you'd like to hear my take on, hit me up in the comments below. I'd love to take a look at that and incorporate it in one of my next videos. So thank you so much for watching. And please remember, guys, for quick pre-approvals and even answers on scenarios, my contact information is below. Thank you so much. We are here to support you.